BlackRock are the people that can make things happen, and them getting FCA approval in the UK is for a reason. And it was just an epiphany to me that over 20 years in money and finance, I didn't understand money. It's a bit of a robbery that you're not taught these things, because I think it's unfair that we don't understand how pound works and what it really is. And the decisions that were made in the past that affect how much it's worth. First thing you need in Bitcoin is an open mind. It's given me a much more appreciative view on time, because time is the one thing we're not getting back. People don't realize that. They don't realize how much, their time is being eroded away, as you call it. Economic value is being eroded away. So real-time inflation for me is 10%, and then you've got the money debasement on top. I think to beat it, you've got to be comfortably at 15%. But would I buy property? Well, actually, by buying property, all I'm hedging is the failure of fiat, which Bitcoin is basically there for anyway. Having the conversation early is a good thing to do, because putting systems and processes in place can help you later. It can save you money later as well, massively.
Hi, Robin. Welcome to the Bitcoin IFA podcast.
Hi, Dan. Thanks for having me.
Okay, so Robin Thatcher, you're known as the Bitcoin accountant. We're going to come on to that in a second. But we always start with the same question for everyone, and that's everyone's against Bitcoin until they're for it. So what's your Bitcoin story?
So I'd never really heard of Bitcoin, and I wasn't against it. I don't actually think I was ever against it in any capacity. But what got me thinking down this road was, it was pre-COVID. And I was sat there thinking, everything's going digital. What about digital currency, right? There's got to be digital currency. So I went down, I'd call it the crypto rabbit hole. You make a bit of money, you lose a bit of money, you buy things you don't really understand. And then going through that for a couple of years, hitting I think it was the bear market. I think it was 2022 crypto bear market that hit, and it hit hard. And I sort of was always looking for, as most people do, looking for 100x's, quick bucks here and there. And I did look at Bitcoin when it was quite low, and then it went to all-time high at like 60K and went back down again. And I was like, I actually looked, and I could have made the same money that I made faffing around with 20 transactions a day just by hodling Bitcoin. And at that point, I was sort of dabbling in the tax side of things in crypto assets as well. So I made a conscious decision to go to Miami to the Bitcoin conference. And I know that sounds ridiculous. You start off at like the biggest conference, but it was, a tax deductible trip to Miami. So, I went out there. I sat in a room with a few hundred people watching Michael Saylor speak. And it really, I know it sounds really cheesy, but it did change my life. He spoke to me in a way that an accountant can just understand and comprehend from a business perspective. He was plain in business terms. He talked about looking at business investments, property, doesn't even beat inflation. And it was probably the best of a bad bunch. And then he found Bitcoin. And whilst that didn't explain Bitcoin to me, it explained inflation to me a little bit. I had the great fortune of going to the book stand there and meeting Saif Dean and getting a signed copy of the Bitcoin Standard. And whilst I was in Miami, I read the Bitcoin Standard, which, I'm not going to say it was a poor experience. Sat in the sun of Miami whilst at a Bitcoin conference at my hotel on Miami Beach reading the Bitcoin Standard. It was great. And it was just an epiphany to me that over 20 years in money and finance, I didn't understand money. I had no concept of where it came from, how it worked, what inflation was. I never wanted to be an economist, but understanding basics should be a really important part of life, in my opinion, and it just wasn't. And I had, that moment that we all have where you go, I've been lied to my whole life. And yeah, that was it. Then I never really looked back from 2022. I didn't invest as much as I should have done. I think I learned the investor mindset, which is when there's a bear market, it's much harder to buy than you think it is. When you're truly in Bitcoin, you sit there and say, oh, it was 20K then. But actually, when it's on its way down, it's really hard to get the mindset of going, I'm going to go into it. It's a weird thing, that psychology. But I learned that. And then since then, I've just come out the other side and been a full-on Bitcoiner. as an accountant, I need to understand. Not, I don't want to use the words intrinsic value, but I need to understand how something works and what value it brings to me. And now I understand that. I don't understand where anything else fits into that.
Wow, what a journey. Very few Bitcoiners, I think, would actually start at the Bitcoin conference, which, as we record, so this episode's going out in a couple of weeks, but as we record, the Bitcoin conference is on in Vegas right now. I've never been able to get to one, and I've been in Bitcoin for half a decade. Really wanted to go this year. So to use that as your jumping off point into the Bitcoin ecosystem,
You're coming to the USA next year, mate, because it's such a different experience. Like I said it from Miami that Bitcoin in America is probably about 3 or 4 years ahead in adoption wise than the UK, and the conference shows that. You know, not just the acceptance, but the speakers, the vibe of people. I would say slightly, with the exception of last year in Nashville, because it became a bit political with Trump being there. I think there was a political undertone, from my opinion, that I didn't really like. You know, a lot of "Make America Great" hats again, and you know, whilst I wasn't lost on the basis that it's the first time an American president was speaking about Bitcoin, it was huge. The person who it was can make it a little bit controversial, which dampened it a little bit for me, because there was people only there for the Trump vibe, not the Bitcoin vibe.
yeah, I can understand that. I watched some of it last year and definitely got that feeling that there was just a bit of a circus around it.
100%, yeah. And
Uh,
then obviously the circus around the actual security and things like that. Having gone to Miami for 2 years, and you just walk into the main stage. Obviously, last year they had Secret Service checking everyone, so the queue was like round the room. It was ridiculous.
well, hopefully none of that next year. And yeah, I will take you up on that intention. We'll be hanging out wherever it is next year. There were a couple of things that you touched on there. So you mentioned the 20 transactions per day. We're going to come back to that because that, I think, that will feed into a lot of what your job is around. But first, what I'd like to touch on is when you were sat in the sun in Miami reading the Bitcoin Standard, that must have been a hell of a paradigm shift for you. So for someone that's worked in financial services for 20 years, to suddenly have almost that entire foundation of everything that your career is built on sort of crumble away. How have you dealt with that? And how have you spoken to any of your cohorts and colleagues about that?
So I find it very difficult. You know, we use the expression "orange pilling" someone. I find it very difficult because the first, and I'll say this to anyone: the first thing you need in Bitcoin is an open mind. um, and a lot of people don't have that. And it's not trying to insult anyone, because the media do report it a certain way and report a certain narrative. The same way that I could argue that education teaches us certain things, and we're not taught to expansively look into that, because we're taught what we're taught. Um, One of the hardest things I do think, though, is people with an open mind. They will believe what they read on BBC News or what they read on a certain news website. And what that means is, whether they understand or not, they have a closed mind because they believe what they're taught. And one thing I always said when I first got into Bitcoin was, I was always really conscious and went, I'm not a conspiracy theorist. But it's not about being a conspiracy theorist. It's about having your eyes open to the world. So you're absolutely right. It did crumble my understanding of finance, but that didn't change things for me. What it has changed for me is what I think of the space that I work in. Taxes, whilst it's essential, I think, for a democracy, and I totally agree with it. I think you can disagree with what is happening and how much you pay, and still be compliant. Doesn't mean you don't become compliant, but you can still ask the questions. And I think that's what I see more and more now. The questions can be asked. From a career perspective, I think it's a bit of a robbery that you're not taught these things, because I think it's unfair that we don't understand how a pound works and what it really is, and the decisions that were made in the past that affect how much it's worth, because it gives people in a certain position no chance. And I think that's tremendously unfair. So it's changed my outlook on the world. It's changed my outlook on life. It's changed my outlook on everything, on literally everything. You know, there's so much that it has changed. Especially being, I think it's quite important that I'm 40, because I think at 40 I reach what we would call midlife crisis. I can see where that comes in now. So my priorities totally change. Health is so much more important to me. Happiness is so much more important to me. But that's all part of the journey that Bitcoin started for me.
Yeah, would you say that it's given you more of a long-term view of life?
It's given me more of a long-term view on life, 100%, and it's given me a much more appreciative view on time, because time is the one thing we're not getting back. So, I can sit here and be confident that Bitcoin's going to go up, because I am, and I know where I think it's going to be in a few years, and I can feel comfortable at that level. But at the same time, I don't want to sit here and go, I can't wait for 2030 when I think it's £1 million a coin, because I won't get those 5 years back. I've got to enjoy those 5 years while they happen. So it's given me such an outlook on time, because scarcity is something you learn more about in Bitcoin. Time's the only thing you can't buy more of.
Yeah, I completely agree, and I have a lived world example of that, which is that I made a mess of my first cycle. I lost a lot of money. And it was essentially money that I had built up over 10 to 15 years of a career, and was essentially positive equity in my property, which I sold, messed up my first cycle. And so this cycle, I'm really buying back that economic energy that I essentially wasted, and have had to basically not waste the last 3 years, because I've ended up here and I'm doing what I want to do now, which is talk about Bitcoin with folks such as yourself. But I've had to sit and wait for 3 years for this bull run to essentially make back the economic energy that I lost. And Bitcoin, I talk about this in my workshops, Bitcoin is the greatest store of value for taking your stored economic energy forward in time and beating inflation, debasement. It's also, you touched on, how a pound works and what it is. I also talk about in my workshops, and this can be really quite jarring for financial advisors, which is that your real hurdle rate is somewhere between 10 to 12%, depending on where you are globally, because it's the combination of debasement and inflation, not just inflation. And debasement essentially is what drives the stock market. And you can see that that is a complete paradigm shift for financial advisors, who have obviously all been trained, and we all get taught and trained that your hurdle rate is inflation, 2, 3, 4%, whatever that is per year. But actually, it can be a shock when I'm showing them that actually your hurdle rate is 10 to 12%.
I always say 15%, because I
Wow.
think inflation's going to be 10. Real time inflation. I mean, I don't believe half the figures that are reported anymore. So real time inflation for me is 10%, and then you've got the money debasement on top. I think to beat it, you've got to be comfortably at 15%. But again, I'm not an IFA. I'm an accountant, so I'm not an investment person. But I look at that and go, you have to be at 15%. And I think people don't realize that. They don't realize how much, of their time is being eroded away, as you call it, economic value is being eroded away. And that's something the biggest hurdle for me as an accountant, and you'll understand this. The word I couldn't get round was diversification. I could not get round that word, because I have been ingrained all my life that you need to diversify. So having a 5% or 10% allocation of Bitcoin, as you will be trying to persuade people to get into, for me, I look at that and go, well, that's not enough, because 10% of my wealth, although it's actually a small number, I'm not rich by any means, but 10% of my wealth is not going to give me a retirement figure. So I need to have more. And actually, then I sit there and go, well, would I buy property? Well, actually, by buying property, all I'm hedging is the failure of fiat, which Bitcoin is basically there for anyway. So I'm doing the same thing. I sat there at one point and went, what about gold? Because I still think gold has value, but it has that counterparty risk, right? Huge counterparty risk and storing risk. So I was sitting there going, well, do I buy gold? And then I was like, well, no, I don't want that counterparty risk. And there's been historical examples of governments banning gold. And if fiat debasement does happen at the level, I think banning gold is a realistic option on the table again. So we'll see. But yeah, all of these things, mind blowing from where I was 4 years ago.
Yeah, the realization of sort of fiat currency versus a hard money, that's another paradigm shift that unfortunately, as you alluded to earlier, we're not taught it. We're not taught it in schools. No one teaches us what actually is money. And the pieces of paper or the digital numbers that we transact with now are not money, like they're currency.
And me and you have discussed this privately, but one of the things I really want to do and I'm passionate about is go into universities and schools and just trying to have an open conversation, almost, and I'm good friends with Joe Bryan, so I'm sure he won't mind me mentioning, but what's the problem? Basically, getting that into a place where I can just talk about it. I don't care if it's necessarily about tax, but if I can get in the room and get people at a young age to just look at that, maybe it gives them more of a chance at the future that I see for my kids that they will struggle with on a fiat lifestyle.
Yeah, completely agree. A couple of things to say there. So firstly, I say this every episode, but Joe Bryan's What's the Problem is always a link in the show notes. Please go and check that out if you haven't watched it. I would say that it is essential viewing for anyone that works in the financial services industry. And actually, I would say it's essential viewing for anyone that doesn't as well. And yeah, you're absolutely correct. You and I have both discussed and said that we want to go into schools, into universities, to just give them that kind of eye-opening, a slightly different view on what actually is money. Right, okay. So, Robin, let's move on to the meat and potatoes, as it were, of what we're going to talk about today. You, as an accountant, obviously have a great insight into what Bitcoin is from a classification point of view in terms of being an asset. You obviously will know about disposal and capital gains, and also about holding Bitcoin as a treasury asset on a business, on a balance sheet. And that's certainly something that I'm looking into. It's probably something that most IFAs aren't aware of, that you can actually hold it on a balance sheet. And it's something that I really want to dig into and make them aware of, because obviously if you have an exceptionally good year, you want to look into reducing corporation tax or your own personal income tax. It can be a great way of buying an asset that's appreciating in value, and then adding value to your business balance sheet. So let's run through those in order. So firstly, let's talk about the classification of Bitcoin. So under UK accounting standards, how should it be classed on a
So it's an
company's
intangible
balance
asset.
sheet?
It's simple as that. It's an intangible asset. It sits on the balance sheet as an intangible asset.
And what does that mean?
Intangible. So tangible just means something you can touch. It's an asset you can't physically touch. So it's intangible.
Okay. So, and it would just sit there the same as any other intangible asset. It would sit there on the balance sheet.
Correct.
Okay. But given Bitcoin's volatility, how does that then affect, on the annual reporting, if it's doubled in value or it's had a 60% drawdown, what does that mean for a company's balance sheet?
Great question. And I think it's essential at this point to caveat that Bitcoin is still a new asset. And I expect these things to change in the next 5 years, probably. For example, if Bitcoin's £1 million a coin, I expect some accounting standards to be released that will change this. At the moment, you have a bit of a choice. You can report it at the cost value, which just sits there. It doesn't matter what the current value is. It just sits there at its cost. And what you've got is an unrealized gain or loss that doesn't go anywhere on your accounts. That's fine for sort of small-sized companies. If you're going to sort of bigger companies and audit level, they'd have to revalue. Revaluing doesn't actually realize the profit. What it does is it posts the profit somewhere else. So on your balance sheet, you have something called a revaluation reserve. It's similar to what would happen with a property. If you had a property that you bought for 50,000, revalued it at 500,000, you can revalue it on your balance sheet. So the asset is now worth 500,000, but you've got 450k of difference. That goes into something called the revaluation reserve. It's like an unrealized profit. It doesn't go to your profit and loss. It just sits on your balance sheet, but revalues your assets. Bitcoin is exactly the same. You can revalue it to its current value. So if it had gone down 60%, you could revalue it. The loss or gain that you've got goes into the revaluation reserve. The reason that's quite important is because this part of your accounts, your balance sheet's public record. It goes on Companies House. So I would say a lot of small companies wouldn't want to revalue it each year because it would show your assets as quite high. Unless you're looking at certain financing figures and things like that, it would be perfectly legitimate if you paid 20 grand for one Bitcoin, it was worth a million, to revalue it to a million because you've got £1 million asset on your balance sheet and you could revalue it. And then any credit companies, etc., could look at your balance sheet online and say, oh, yeah, I can see you've got £1 million of asset. And obviously, there's nothing wrong with that because you legitimately have. So yeah, there's those sorts of considerations, but I think we're going to touch upon trends later, but the trend generally is most people want to keep it at cost basis at the minute
Why do they want to keep it at cost basis?
because they don't want people to be able to see what's on their balance sheet and see as public record that their company has a significant amount of asset. You can also bear in mind we're in a space that's a very privacy focused space. You can almost dox someone if they revalue it. If I went, you don't get to see the asset breakdown necessarily, but you could probably decipher how much someone's holding or close to how much someone's holding by reviewing that balance sheet online. And again, that's public record. It has to be there on Companies House. So you'd probably be able to get a decent idea of what a company's holding in that scenario.
I see. So the Bitcoin will be classed as a Bitcoin on their balance sheet, which is a public record.
It's not classed as a Bitcoin, but you could decipher what someone's got. If you know a Bitcoin company is there and you can look at their assets, not divided out into the asset class, so they wouldn't see that level of data, but they'd be able to see something. I think it stands to reason that people might think you could probably put two and two together. Maybe you're making five, but maybe you're making four. And that's more of a chance than most Bitcoiners would like.
I see. So you would have intangible assets
Correct.
this year, intangible assets last year. Let's say it's gone up by 60%, your intangible assets, and the Bitcoin price has gone up by 60%. You'd be able to put two and two together.
100%.
And just for the listeners and viewers, doxing, what does that mean?
So working in the Bitcoin space, I learn a lot of this, and it's all new lingo to me. But doxing is basically like showing who you are or showing what you've got. Bitcoiners generally like to be very private. Privacy, and we'll probably touch upon this later. Privacy is a huge, huge thing as well, for so many reasons: safety, security, all of these things. So doxing is about not revealing who you are unless you can verify, not revealing what you've got to anybody. Most Bitcoiners will never tell you what their stack is for pure security reasons. I can understand why that is. Even as an accountant, that can be a challenge. So there's ways to work around it, but yeah, it's just important that doxing is very much about giving away that piece of security that you might have on a piece of information, and revealing too much that someone might be able to decipher who you are, what you are, where you live, etc.
I see. Yep. And yeah, that's absolutely something that I've also come to live by since becoming a Bitcoiner, which is just being a lot more private about personal things. How then? Let's talk about the tax implications. So if you buy Bitcoin on your balance sheet, you hold it for a few years, you don't actually pay any tax on any of the unrealized gains, same as personally. If you were to then sell it at a loss on the balance sheet, are you able to carry those losses forwards against corporation tax in the same way personally you can carry forward losses against your capital gains?
Yeah, exactly the same. So if you sold for a loss, the loss goes up to your P&L and gets offset as a loss on investments and offset against your potential profit that you've made. And if you haven't made any profit that year, you'd carry that loss forward.
Okay, so it's fairly similar to an individual, but then let's think long term. Let's say I'm buying Bitcoin on my balance sheet for my business as a way to maybe fund my retirement, pay myself dividends in retirement once I actually stop trading. What would that look like from an accountancy perspective? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, there's a very good chance your clients have already asked you about Bitcoin. And if they haven't, they soon will. That's why I've created 2 free downloads to help you feel confident and informed and ready to have professional conversations with your clients about this new emerging asset class. Head over to thebitcoinifa.com to get 1, the 8 reasons you need Bitcoin in your personal and professional portfolios, and 2, the Bitcoin cheat sheet, a concise, jargon-free guide designed to help you go from zero to confident and knowledgeable in under 10 minutes. Whether you're Bitcoin curious or Bitcoin cautious, these resources will help you speak with clarity and confidence. It takes less than 60 seconds. Again, that's thebitcoinifa.com and enter your email address to get your hands on these free resources today. Now, back to the episode.
So it's a really good question. And one thing I want to touch upon here is when people are thinking about this, it's really important to speak to someone, whether that's paid for or not, to get advice on what your plans are, because it's all about what the advantages are, but what your long-term plans are. How are you going to get it out? So to give you an example, if someone opens a company today and they're going to buy one Bitcoin, out of their trading profits, that's fine. But what if that Bitcoin goes to 1 million? And then you've suddenly got to the point where we're at a point at the moment where higher rate tax is kicking at 50k. So you talked about drip feeding out there. Yeah, you might want to drip feed out 50 grand a year, but that's 20 years of 50 grand a year. Are you going to have 20 years, or do you need to have a more?
Plus the asset is going up probably during that time as well.
Exactly. So you've got to have that plan works. Now, consequently it can work, because you might be sitting there going, well, I'm already taking 50 grand from my company, it's got excess cash reserves afterwards, so I want to invest that in Bitcoin and hold it on my balance sheet. That's fine, but just bear in mind you are kicking the can down the road. So, and I use that expression a lot, I personally do it. There are plans that you can put in place, but it's important to have that plan in place. So your example is absolutely right. You can draw in retirement, you could draw dividends from that company, but bear in mind any other pensions would go towards that income as well. So, if it remains at 50 grand, which I don't think it's changing anytime soon, you're talking about your pension, 50 grand less your pension. So if your pension's 12 grand, then suddenly you're only left with 38 grand that you can take, and then your drip feeding becomes less and less efficient. So you have got to plan all of those things.
Agreed. And that's most of the listeners to this podcast will be financial advisors. They will know all about the importance of having a financial plan in place. But then let's say, because you and I have discussed this previously, there are other ways around this, right? So in terms of retiring and emigrating, for example.
So there are ways around it. Emigration is one that when you talk with tax advisors and accountants, there's two important distinguishments. There's a legal one, and then there's your tax advisors like myself. You go to a certain point where if your wealth is significant, you would pay a tax barrister, which would be expensive, to formulate a tax efficiency plan. If I had a few million of Bitcoin, I wish, but if I had a few million of Bitcoin and I wanted to look at tax efficiency, I'd probably be going to a tax barrister to formulate a tax plan for me. It doesn't mean I won't pay any tax, but it means I'm absolutely ironclad locked in legally that HMRC can take no action against me. If I said to someone, right, you can go to this country and pay no tax, I would probably be correct, but I'm not the person that's going to be defending you in court. So that's an important distinction to make that a lot of people don't realize, because once you go, like I say, you go from sort of tax accountant who can give you tax advice, tax plans. Once you start going the big boy level, you want to really pay the big boy bucks to get the right sort of ironclad backup. So yeah, from that point of view, what I would say is high level residency is complex, but let's say we'll take the easy road. You leave the country, you never come back, you don't spend 30 days in the UK, you were a non-UK tax resident. High level, that's enough. Pending a few ties, but that's enough. You could go to a jurisdiction. Dubai's one at the moment is a good example. They don't charge tax on foreign dividends. So I could go to Dubai, I could live in Dubai, never come back to the UK, as I say, under 30 days in a year. I'm a Dubai tax resident. Really important to distinguish between tax residency and residency. They're two different things. Tax residency can be based on the local laws of where you are. Like I say, you could leave the UK, not come back, spend 30 days in the UK because an emergency happens, bang, you're a UK tax resident again. So it's important to distinguish between that. But you can go to Dubai, non-UK tax resident, Dubai tax resident. I can then draw dividends from that company tax-free because Dubai don't tax me on those dividends. And I adhere to the Dubai tax authorities at that point. So that's the sort of thing you can do. And that's the sort of thing you can put in place. But that's really high level, and things could change. You've got to be careful because these things can evolve. The other thing I'll say when we talk about plans is you don't have to know what you're going to do in 20 years. You can have an idea of what you're going to do in 20 years, but in 5 years that might change. But the important thing is to know what your goals are right now. So the person that you're speaking to, hopefully me, can advise you a little bit on the best tax plan for it. But those sort of things are just what you need to have in mind. One of the hardest things I have in my job is people come to me and go, how do I become tax efficient? And I'll go, well, that depends on what you want to achieve. And the biggest example I always use to people is if you want to buy a Lamborghini tomorrow, your tax advice would be very different to if you want to hold for the rest of your life and pass everything to your kids and you've got no personal wealth goals at all. So they're two very extreme scenarios, but obviously the advice will be very different. If you can't give that person your goal and your end goal at that point, then they're going to struggle to advise you.
Yeah, completely agree. So yeah, whether you're high time preference or low time preference, high time preference being you want the Lamborghini tomorrow, low time preference being I'm happy to buy and hold.
Correct.
It's a great point, and it was something I was going to touch on there was about the planning for retirement 20, 30 years down the line, whatever that looks like. It can obviously be quite different or difficult because everything could change, right? So
100%.
we're finding in this country that we're getting taxed more and more and more. Whether that changes 20 years from now, we'll see. But places like Dubai or Portugal or any other places that I don't know if Portugal has no tax on foreign dividends,
They've
but
changed it. They changed it about 2 years ago. So they used to have a non-residency no tax rule. They changed it, so it's not as it was during the last bull run. It was a big place for people to sort of go to. It's not as big anymore.
okay. But yeah, so when you're thinking potentially about that, you obviously just have to bear in mind that everything could change. There could be even exit taxes, let's say on the way out. So it is a consideration when buying Bitcoin through your business is obviously having the end goal in mind and trying to figure out how am I going to release this later on in a tax efficient manner, bearing in mind, well, based on today, but bearing in mind everything could change.
The other thing I'll add there is also though that important distinguishment between if I've got a company that's earning 100 grand profit a year, after tax I've got 80 grand. I'm taking 50 grand to remain tax efficient and remain in the basic rate. I've got a 30 grand window there. If I take that 30 grand out and invest in Bitcoin personally, I've got to take the hit on tax, which dividend tax is about 33.25% at that point. So I'm going to lose a third of what I've got. So that 30 grand, I'm losing 10 grand in tax. So I'm going to have 20 grand to invest. Would I rather have 20 grand invested personally or 30 grand invested in my company where I'm going to kick the can down the road and have a bigger tax problem when Bitcoin goes cataplasmic? But those are your decisions to make based on your goals, which is fine. But they're the sort of examples you need to consider, because it's not just as simple as, right, I want to invest in the company. But like I say, I do, but my openness to that is I can kick the can down the road and think in 15 years' time, I'd rather have a big tax problem when I've got a lot of money than think I've got less money now invested because I've taken a big tax hit on it and paid it all to HMRC. Personal preference, but again, it's purely, those sort of things you need to consider.
Yeah, completely agree. And then, financial advisors listening to this need to be aware of that, obviously, when advising their clients. And obviously, they can speak with you and very closely with you, and build those plans with you. How often do you actually work closely with IFAs, wealth managers?
At the moment, I get more exploratory meetings, I think I'd say, because people are coming into the space and they get to know me and they think this guy I want to know for when the market changes. I work with IFAs obviously in my traditional world, but my traditional world is getting smaller and my Bitcoin world is getting bigger. So I think that's more where I'm working. I mean, I said to you that I was talking at a Grow Empowered event. They're obviously a SaaS pension provider. So there was a lot of people in the room who would be interested in that sort of thing. But I think mine's a business card or a name that they take for when the time changes.
You mean in terms of, retail access, that kind
Retail
of thing?
access and restrictions are lifted a little bit. A lot of the questions that come around at the moment are from Bitcoiners that are being told they can't do things with pensions and things like that, that actually IFAs have got their hands tied on anyway. So though I do think there's a lot of interest, but I mean, I had a meeting with a guy last year, didn't fully understand Bitcoin, but was very interested in the crypto market. But as you know, can't do a lot with it. So I would expect him to be having closer conversations if things change, definitely. So I've got a few. I would say I've got 3 or 4 who've contacted me and spoke to me in the past who are like that.
Yeah, that I think slowly we're starting to see that change even within the IFA world. So since starting this podcast and starting this business, I'm having more and more IFAs reach out to me privately. I don't tend to get much engagement on LinkedIn or Twitter. There aren't very many likes from IFAs, but people are reaching out to me privately,
No,
expressing
I
their
mean,
interest.
I want that with accountants as well. I want the questions. I mean, there are other crypto guys who work with the organizations and crypto conversations are happening, but I want the Bitcoin guys to reach out to me. That's where I love working in crypto overall, but obviously Bitcoin's my passion. So I want to be able to go and have those conversations about the future of Bitcoin for companies and how that'll affect accountancy businesses and things like that. So I do want more of that, but I'm with you at the same time. A lot of them don't reach out necessarily publicly. But I do think I'm in a lot of people, to use an old term, I think I'm in a lot of people's Rolodexes for when the time comes.
Well, same, hopefully. um,
You will be. I think I sit here confidently saying that. Bear in mind, these will be people that I've spoken to once or twice over the past 3 years, but I know full well that they would come to me when the time comes. And I know that might sound like blind confidence, but I'm 100% confident of it.
Hey team, just a quick interlude to let you know that Robin and I recorded this before the FCA's announcement that retail would be granted ETN access to crypto/Bitcoin investments. I think you'll agree, Robin was super prescient in saying that he expected retail to be granted access sooner than we thought. Enjoy. Are you finding that people reaching out to you like that or keeping you in their Rolodexes, is that accelerating, even though we don't have much clarity on when we're likely to see regulatory change from the FCA? We know that they've got their they've said that they're going to be releasing some kind of messaging in 2026, which is a rather ambiguous 365-day window to deliver that. So none of us know exactly when that's coming, but I personally feel that there is this groundswell of change, that people know that they need to start getting ahead of it, because I personally think it could happen any day. I think especially if the next 12 to 24 weeks play out as previous cycles have, the demand from financial advisors, from accountants, from retail will become so great that the FCA will have to accelerate their response. What do you think about that?
So I'm going to answer that with without sounding cocky, and I'm not trying to be condescending, but I'm going to ask you 2 questions back. So, what is BlackRock's best performing ETF?
It's the IBIT ETF. It's the best. It's the best ETF launch of all time.
And I'm actually going to add a third question: how big are BlackRock?
Largest assets under management globally.
And how long ago did they get FCA approval in the UK?
6 weeks, 2nd of April, I believe.
Do you think that they're going to have the amount of money that can change the FCA's rules?
So that's a really great question. I do believe they will have the lobbying power, and there are only, I think they were the 49th company to be granted crypto specifications, like crypto, the ability to interact with crypto in this country. Only 14% of applications have ever been passed, so you can see how many have applied there for only 49 to be passed. The majority of those are exchanges. BlackRock are not coming here to be an exchange.
I 1,000% agree. So I am of the personal opinion that that was the biggest news that I saw in the past year towards those FCA rules. So there's rumors about the head of the FCA. I won't get into that, but there's rumors about them. There's rumors about how risk averse they are towards crypto. And I think one of the biggest problems we have, which we're probably going to talk about at some point, is crypto and Bitcoin and the separation. But I think BlackRock are the people that can make things happen. And them getting FCA approval in the UK is for a reason. And I believe that reason is because they think they want first mover advantage on that Bitcoin ETF in the UK. And then once they do that, they've got, I don't like to use the word, but they've got a monopoly because they're going to be the biggest player. They're going to be the ones that IFAs turn to. They're going to be the way for people to get Bitcoin exposure without buying personal Bitcoin and having to learn to self-custody and all those things that no one wants to do. That's a barrier to entry at the minute. So for me, I think that's probably the biggest change. So I agree with you 100%. I think something is coming without any insider knowledge at all. I just think something is coming, and I think it has to change because it's their best performing ETF, and UK retail is suffering because of it.
Completely agree. Previous episode was with Peter Lane, friend of both of ours. And yeah, my fear would be that IBIT or BlackRock ETF would get first mover advantage and monopolistic network effect advantage when we've had Europe's first Bitcoin ETF launch out of the UK, launched before the US ETFs. I'm not pushing or selling or promoting Jacoby's Bitcoin ETF, but we were the first to launch an ETF in Europe versus America. Peter was on the podcast recently, described it as he got all Ryder Cuppy. Decided that he had to get out first. And so, I would really like to see that retail is granted access and that a UK business is supported by IFAs. It's certainly the ETF that I will be using once retail can get access. And yeah, that's what I was alluding to earlier, that I'm getting more and more individuals reaching out to me one-on-one who have been in Bitcoin or crypto for years, want to create some kind of access for their clients, and it's just tremendously difficult. So hopefully there is that groundswell. Hopefully we can change the FCA's mind. Let's touch on, so what do you mean by the difference between Bitcoin and crypto?
So one of the most difficult things in my job, being a Bitcoiner at the moment and dealing with Bitcoiners, and I'm not criticizing this, they don't like the word crypto. Unfortunately, I work in a world where Bitcoin is a crypto asset from a HMRC standpoint, not from my standpoint, but from a HMRC standpoint. So they're all grouped together. I know that they're totally different, and I know that one means something, and I feel that one has value and that the rest don't. But the fact is, for my job, they do not distinguish. So what I mean by that is that for me, one of the biggest things that has to happen in the future is that separation, because Bitcoin has to become its own asset. And I don't necessarily have an express opinion on where that sits. I know a lot of people will say it should be a currency. That's fine. I'm not adverse to that. I think the biggest challenge at first is getting them separated. So it's not dealt with a picture of a dog with a hat and Bitcoin being in the same bracket. And I think that's really important. The problem from a regulatory point of view at the moment is we have to accept they are, and that's where we are. Whether we agree with it or not, we are. And that's one of the difficulties when we talk about these things that, and I think from a regulatory point of view, I can understand it, because if you've got crypto assets where there's the wild west and anyone can create anything and it can become £1 billion asset overnight for no apparent reason, and then they can just rug pull and disappear, I think that's difficult to regulate, especially when Bitcoin falls into that same asset class. So for me, the biggest challenge really is to separate the two away so that Bitcoin is in its own class and then can therefore have its own set of rules and regulations, because that way we can put fairer regulations in place. We can put, fairer taxes in place. We can put better, more efficient taxes in place that encourage investment, those sorts of things. But right now, that's the difficulty. I mean, one of the things you'll probably have seen with Smarter Web Company that I keep seeing over and over again is that the wording he had to use in the document was a digital asset stockpile, and people keep coming in going, but I don't want you to buy digital assets. I'm invested because you're a Bitcoin company. And he keeps saying, I am a Bitcoin company, but for regulatory purposes, I have to put I'm a digital stockpiler. And that's what people miss. And that's difficult to get around, and I totally understand. And working in the industry, I understand it. But that's one thing I feel has to change, because when I have meetings with HMRC's crypto asset team, I have crypto events that I go to, and you have a crossover between the two, but they're obviously very different. And that's, as a Bitcoiner, that's what changes your mind on everything. You sort of ignore everything else and just go to Bitcoin. But sometimes there isn't a luxury of that when you work in the industry because it's a crypto asset.
Yep. Yeah, I see that all the time on LinkedIn. IFAs posting quite negative things, but always using the word crypto. I don't think that that is helped by the fact that I mean, I've probably read every single release by the FCA over the last 6 to 12 months, and they don't mention the word Bitcoin. It's always crypto. And to not even mention the asset that represents, as of today, 65% of the total crypto market cap. It's kind of like writing an article about social media and not mentioning Meta.
It is, but the difficulty is when you go into the regulatory meetings and speak to the people directly, it's not that they're not Bitcoiners, but they don't understand the underlying asset. So whether Bitcoin is a massive market share or not, they group it in the same as everything else. And they can't get out of that mindset. Like I say, I do meet with HMRC and their crypto asset team, and I have done as part of a trade group that I'm in. And when I asked the question about it, it was almost like, okay, but it's the same as everything else anyway, and it's treated the same as everything else, and it doesn't need to change. And it's really hard to explain that mindset and try and without, we all know we talk about Joe's video, it's 45 minutes, but you try and orange pill someone in 25 seconds, it's almost impossible. So it's that mindset we've got to get around. And it's a huge challenge. And I do see both sides of it, which sometimes gets me not conflicted, but I almost understand their point of view. It's how you change that point of view, and it's something that I'm trying to lobby for. And I know Bitcoin Policy UK work really hard on this. Freddie and Susie do great work, but it's I feel it's a long way away at the moment.
Yeah, yeah. Although, we'll see. I have faith. I'm an eternal optimist. So let's see. I think if we can change their mind, we will. I mean, do you have any advice for people about how they could go about trying to change that?
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
I think that the first step for me is the conversation. The conversation's got to happen, right? And that's where I'm still there at the moment. I'm not. It's not. I'm not an optimist. I am an optimist. But I also think I very much work on a life motto of I don't deal in problems. I deal in solutions, right? So the solution is easy. Let's reverse engineer it. The solution is we separate them off. But how do we get there? So we need to get the people that matter. Unfortunately, whether you like the fact they matter or not, we need to get the people that matter talking about it. So I know Nigel Farage, like him or hate him, is at the Bitcoin conference. Great. He's having the conversation. Potentially someone who has influence on this country is having the conversation. I write to my local MP. It takes 10 minutes. I'd encourage anyone to do it. Write to your local MP. Just ask them what their stance is on Bitcoin. You don't need anything else. They're compelled to reply to you, is my understanding, as a constituent. So write to them, see what they say. We just need to try and get the conversation out there. The word Bitcoin doesn't have to be negatively reported by BBC News or the FT all the time. It can be a positive news statement. But at the moment, the only way to do that is have that conversation and get the word on people's lips. And then I think it grows from there, because I always thought that 100k would be a barrier. Maybe £100,000 is still a barrier. But there will come a point where you can't ignore it, and therefore the conversation has to happen. And at that point, that's when I think things start to change. So the more, any way you can get that conversation with people of power and people of influence is great. I'm not going to tell people how to do it. I just suggested writing to your MP. That's the one I know is easy access. Those sorts of things, though, challenging the people in power to talk about it can change the landscape, because the more they talk about it, the more they take time to understand it. The more they take time to understand it, there's an old expression of you'll never meet a Bitcoiner who's done 100 hours of research who's not a Bitcoiner. And that's the challenge. I think that's the big challenge, that an MP will read the word Bitcoin and won't do their research. The same way, we all talk about, how teeth are scarce from one certain article. They obviously didn't do their research. They might have sat down with Michael Saylor for 30 minutes, but they spent no time researching Bitcoin besides that. These are the things that we really have to cross, and the barriers we have to cross. How do you get people not to our level of understanding, but to take the time to watch Joe's video or do those things to just understand what the problem is before we try and solve it? Because the idea of what's the problem is perfect, right? What's the problem? I'm not going to give you the answer. The answer's out there, but we just need to know what the problem is first.
Yeah, completely agree. Completely agree. Okay, Robin, let's bring it back to some of the challenges of being a Bitcoin accountant. What have I not asked you that you would like people to be aware of?
It's a difficult one. One of the things that being a Bitcoin accountant, I always say to people is, everyone has this idealistic point of view that we're going to hodl forever, right? And if everyone hodls forever, I don't have a job. So the reason I have a job is because not everyone hodls forever. So that might be a harsh reality, and I understand people don't want you to sell, and people don't like Bitcoiners that sell, but it is a harsh reality for some people. If they bought a few years ago, their life has already changed, and that might be enough for them. And we have to accept that every person is different in their view. I think having the conversation early is a good thing to do, because putting systems and processes in place can help you later. It can save you money later as well, massively. The amount of, and I'm not quoting any clients here, but the amount of messes that I've had to mop up that I've been paid a decent amount for is, purely because people haven't thought about these things. So think about them early. There's nothing, I said it yesterday, and again, I think we'll go into privacy again later on, but privacy doesn't have to be a blocker for taxes. It doesn't mean you don't have to remain compliant. All it means is you have to be on top of your record keeping, because privacy means that you're saying HMRC can't follow the breadcrumbs. That's fine. I don't have a problem with that. There's nothing illegal about that, as long as you can tell them what you've done and how you've done it and how you've tracked it. And I know people may not like that, but there is a fine line between being compliant and being private. And that's very important to me. I can't be an accountant and sit here and say hide everything and they'll never know, because that's not just career suicide, it's illegal. What I'm saying is there's a way to do both, but to do both, you have to put relevant systems and processes in place. So I think for me, having that conversation with someone doesn't have to be a paid for conversation. If it's a short conversation, I'm happy to have it with someone. I love speaking to Bitcoiners. But have that conversation early on, so you can just understand what you need to do to be best prepared for when the time comes. People always say to me, "Oh, I don't need an accountant yet." You might not, but you need to take advice off someone on what you should be doing. Just, if it's paying, I'm not saying I'm going to charge this, but if it's paying someone £100 to put a plan in place, is that really the end of the world? Or, just to get that peace of mind and advice to make sure you're doing things right. It's just about those things, just having those conversations and being not open with privacy. We've talked about privacy. You don't have to get on the phone and go, I've got X amount of Bitcoin and I've held them since this. Get on the phone and say, I started buying in this year. What should I have done, or what do I need to do to get things in place so that when I do sell, and there's a lot of people, trust me, there's a lot of people out there who are planning to sell in the next 12 to 18 months. When things go, I think Bitcoin's undervalued at the minute, but let's say it grows to 150. There are a lot of people out there who are waiting for that to happen, who are going to sell because they've held on for a long time. Whether you agree with that or not, they need to have a tax plan in place, or they need to have something in place that shows that their records can be right. Because it's not as easy as just going, oh, I sold this, I'll go pay the tax now, because I can't just make it up and you can't just make it up. We need to get blockchain transactions to back it up.
Yeah, completely agree. You mentioned earlier that when you were first buying, you were doing like 20 transactions a day. And I was absolutely the same during my first cycles, buying, selling, moving, swapping coins for other coins. Luckily, I kept incredibly good records. I have no idea whether I have the on-chain transactions, but I have, an Excel spreadsheet with basically everything on it. But that is time consuming. But I've always done my own accountancy and my own tax returns, so I've always known to keep those kind of records. But I think most people probably don't, and most people probably aren't aware that anytime they move Bitcoin or buy something with it, swap it for another coin, let's say, those are all sellable events and they're all taxable events.
The other one that really is a big one at the moment that I don't think many people understand is there's really strict rules on lending in the UK. So we all talk about when Bitcoin goes to 1 million, we're going to loan against it. We're going to make, not sell, we'll just loan against it. In the UK, and specifically at the moment, it's the tax rules that cause the problem. In the UK, any change of beneficial ownership is classed as a disposal. What most people don't realize is when they loan their asset, they actually give custody to the provider, which means it's a taxable disposal. Now, I appreciate that may not sound workable, but it's fact. And if HMRC look at it, if it's a large amount, they would have a right to challenge it, because what you've done is you've effectively gone, here's my asset, you hold it, you give me a loan against it, I know I'm going to repay you, so that's still my asset in my mind, but it's not. If you default on that, they just take it because they're in custody of it. Now, not all lenders work that way, but that's because rules in different countries, specifically America, don't work that way. So a lot of these lenders are based in America and they don't consider UK tax rules. I was at a Bitcoin event about 2 months ago and I can't remember what product it was, but someone was there and I asked him the question and he said, I've got no idea. Didn't know that was the UK rules. I'll get our compliance team on it. And I'm sitting there going, this is a guy that's saying he's offering this product in the UK, but doesn't realize the tax problem that he's creating for clients. Now, I appreciate again that that's not workable for everyone, and people will be thinking, well, that's stupid. We are trying to lobby it. It's something that Freddie and Susie and Bitcoin Policy UK have written responses to, and we are trying to get that. I've spoken to HMRC about it. It's not practical, but the difficulty is that's the rule at the minute. So that's something that people need to be aware of. But yeah, you're absolutely right. The amount of people in crypto, this is more than Bitcoin specifically, but the amount of people that come to me and go, oh, I thought tax was just paid on the cash I put in versus the cash I take out. Absolutely not. And that's the thing. It's like 20 transactions a day works out what, a few thousand a year? When you're talking about a few thousand a year, you try and go back 12 months and say, oh, I remember I sent this to that address on that day. I can't remember what it's for. So when your accountant asks you, they expect you to give an answer. They don't. Telling them you don't know isn't worthwhile. Again, exchanges disappear. If you don't keep the records from exchanges and regularly update those records, what if, and I'm not saying this is going to happen, but what if an exchange went under tomorrow? It happened with FTX and people lost their records because they just disappeared. And then you've got a bigger problem to try and fill. I'm not saying we can't work with that because I have, but we have to, it becomes a lot more complex. By just keeping these records and having them in one place, whatever that may be, there's softwares out there that do it. I won't say which ones because I'm not here to promote them, but there are softwares out there that do it. And you can just keep them on there and then all your records pull through. As long as all your wallets are on there, it will pull through from the blockchain. You can export it from your exchange, or you can link it via API for the some people don't like that for security reasons, but you can do all of that and it's there. It's all in there. All your transactions are in there, ready for you to bookkeep at any time. Ideally, you keep on top of them. If if we're on a Bitcoin thing here, if you're just a Bitcoiner just buying, just as long as they pull through, it's going to be pretty simple and not a lot of work. But you can keep on top of it, and it's all there for you when you. And actually, the dashboard on certain or most softwares will tell you what your unrealized gains are. So it's nice to just be able to look and go, I hold X amount, and my unrealized gains are this. And then again, from a security standpoint, most of these softwares are non-KYC, so you don't need to give ID documents or prove anything. And you don't even need to use your real name and real email if you don't want to. So, it's blockchain transactions. If there was ever a hack or HMRC got the data, they wouldn't even know who it was. So it wouldn't matter to them. It's a load of numbers and means nothing to them. So I think, putting these systems in place is important.
Yeah, completely agree. It's not as easy as just going and putting £1,000 on an exchange and then going, willy-nilly trading coins, buying, selling. So That's great advice. Robin, I'm wary of time, so we're going to look to close out. We always ask the same question at the end of this podcast, which is, aside from number go up, what is one great thing that Bitcoin has brought to your life?
An open mind. I was open-minded anyway, but it has brought a real open mind to life. I don't think so much about the future now. I feel positive about the future, but in a different way. And I get to meet lots of similar-minded people. Going and speaking at events is a privilege. I mean, I get to work in the industry I love, and I know so many people who speak to me and go, "I'd love to work in Bitcoin," but they don't have those options yet. I do, so I very much enjoy that. I love speaking about it. I love meeting people in the space. But I just love that the fact that it gives you that open mind. You sit there and you don't have to think about the world being such a bad place because you feel like you've got a bit of a cheat code for it. I sort of really feel like if I was in fiat world 100%, I'd be not depressed, but I'd probably be a lot more pessimistic about the future and where the world's going. Whereas in my world, I don't have to. I feel like I've given my family a cheat code and me a cheat code, and that's enough.
That's brilliant. I love that. You feel blessed.
100%.
Robin, where can people get hold of you if they want to follow you or reach out?
So I am the Bitcoin and crypto accountant on X. I have two websites. So buythebookaccountancy.co.uk is one of my websites. That was my traditional finance business. And then excuse it for a Bitcoin podcast, but it's cryptotaxhelp.co.uk was my second one. Please note I made that before I was a Bitcoiner, so I will rebrand at some point. But you can book calls on either sites. Anyone that listens to this, if you go on cryptotaxhelp.co.uk and you book a call, I won't charge you for it, so don't worry. It says 50 quid. That just filters out time wasting. It's not that I necessarily charge for them. So you can book calls on either of those. By the book accountancy, you can contact me. You can, follow me on X. Any way you want to contact me, you can find. I'm happy to chat and be open about all of that. And in terms of costs, generally I don't charge for a first call anyway. And then we would agree something. If there's a way we can work together, then great. But I'm always upfront with things like that. I think money is a really important thing to be upfront and open about. So no one's going to get hidden charges from me.
Like Bitcoin, you're transparent.
100%. I don't see any other way. I got into business. I used to work in a traditional accountancy firm, and it would be like you pay £100 a month, then you get charged for my time, and people were just getting invoices willy nilly, and it just felt so, like a lawyer. 15 minutes of your time is this. I didn't want to work that way. So yeah, don't get me wrong. I do lose time to these sorts of things, but at the same time, if I'm having a conversation with a Bitcoiner, I generally enjoy it anyway. And then there's usually a way we work together, and I like to build that trust. We have an expression of trust verify. It allows people to speak to me and verify that I'm legit and I am who I am and I understand what I'm talking about. And they can vet me all they want. I'm happy to.
Perfect. Thanks, Robin. Enjoy your day.
Thanks, Dan. Thanks for having me, mate. It's been fun.